Looks like we're getting a little bit lower mortgage rates today, and so I thought I'd take the opportunity to explain what's going on. So there was another report this morning that showed some continuing softening in the jobs market, and how that's related to the mortgage business is that mortgages are not directly influenced by what the Fed decision is, although there's certainly some influence there, but more tied to the 10-year Treasury yield. And more the discussion lately, of course, we've heard so much about inflation, but lately it's been more about the job market, that the job market was too hot for the Fed to cut rates and for the people investing in the 10-year Treasury market. This is indicating that the economy, or at least the job market, is slowing down, and so that's causing the yield in the 10-year Treasury to drop, and we're seeing mortgage rates about 0.25% almost lower today. So that's a good sign. A couple of things with this is, this can come across as being distasteful. We're getting lower mortgage rates because people are going to have a harder time finding a job or maybe getting laid off, and so I want to be the biggest cheerleader for lower mortgage rates myself, but I don't want to come across, with sort of bad karma doing that. It can be distasteful. Second thing is that you have to think about it. If somebody's worried about losing their job, or they've already lost their job or can't find a job, there isn't a mortgage rate low enough to get them to want to buy your house. So that's something that we have to think about going forward, that this isn't necessarily the greatest sign in the world for the future of the market. But I do expect lower rates will increase the number of transactions, which helps the real estate business become a little bit more unstuck. If you got any questions how this impacts your situation, send me a message.